Hey, what's up? This is Brian Kuzmar from Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got to keep today's report kind of really short today, and as you can tell, nice day out, getting a little cooler in the evenings, getting a little bit darker. Before long, we'll be into our cooler weather, and hopefully we'll get another couple cool months here and be done with this hot and muggy summertime weather. Anyway, let's take a look at spot prices. I'm going to go straight to spot prices here, discuss what happened yesterday, and go over a few other things that I saw in the news and different sources here. Yesterday, I expected the market would be about sideways, maybe up a little bit, and that's exactly what we got. This morning, we were about 1913, and New York ended up closing around 1901. Silver at 23.87 on the close. A little bit, tiny bit, but silver with these 50-cent increments and even these dollar increments, which we're going to see here shortly, don't surprise me at all. I don't freak out about it. It just is what it is. And silver is kind of a little more dramatic than gold when it doesn't make its moves. But I think all eyes, we should follow gold overall, because as gold rises, it's going to drag the other metals up. In my opinion, gold is the real mover here of all the metals. Although silver does have reasons to move on industrial demand as well. However, we've got to remember industrial demand has been off quite a bit, but that won't last long. Let's take a look at the aftermarkets here. On the world spot prices, where it did get monkey hammered, and I'm not quite sure why. We closed substantially lower than where we were. I mean, look, 30 bucks down from where we were at New York today, pretty much, or the high of, or the close of yesterday on the world spot prices, or I guess when it opened this morning. I'm sorry, yeah, 1921 at the open. So about 30 bucks down from there, or more. Actually, think about it. 40 actually from the high. Silver monkey hammered as well in the aftermarkets here at $1 right now. But really, it's too early to tell with the world spot prices at this moment. If you see them tonight, if you get a chance and you look at world spot prices tonight, and they are down quite a bit from where they were, or from the $1,923 level, you can probably rest assured that New York will open a little bit lower tomorrow. But maybe not. We'll see what happens. It's kind of some funky stuff going on out there. I'm really hesitant to even make predictions on the short term, even given a lot of evident things that seem to be evident. But in the long term, we're fine. There's no worries there. So I suspect tomorrow we're going to see, again, if the world spot prices are down a little bit, I think we're going to see prices down a little bit tomorrow from where New York closed at. Possibly. Again, let's see what happens tonight. And I think that'll be a big tell for what happens in New York when it opens up tomorrow. But again, like I said, this is a great opportunity to buy the dips. If this stays down tomorrow, buy the dips if you have extra money. If you don't, just go to sleep and ignore silver and gold right now. You don't lose anything unless you sell it. And you certainly don't want to sell when these markets go down a little bit. It does provide a better buying opportunity, a terrible time to sell. Let's move along from there and take a look at it. This is really interesting, I think. And I saw this article earlier, and I was saying, this could really have an impact on gold prices, a significant impact as well. Venezuela, some time ago, when Venezuela was having all these issues with not having fair elections, and the UK and the United States and a lot of countries were saying, well, we don't recognize Maduro as the president. We don't think, he's the president. We think he cheated. Well, truth is, whether he cheated or not, it's none of their business, and that's what UK courts, the upper courts, finally decided, because the lower courts actually told UK, don't give the money to Maduro because he's not the legal president. He's not the legal president of Venezuela, but apparently he is. And nobody really has the right to go into these countries and tell them otherwise. It's their own affairs; they need to deal with them themselves. But the lower courts had ruled that the UK could hold the gold and keep the gold and give it to who they thought was the legal president. And I don't even know what the guy's name is. Anyway, the high courts in UK finally decided, right here it says, UK court decision in battle to get its gold back. And that's exactly what Venezuela won the decision to get their gold back. And I think the first thing you're going to do, unless it's contested, and you can probably rest assured that it'll be contested, it'll run through the courts a little bit longer. But here's the thing. London's already in big trouble. The London bullion banks are in big trouble. London vaults probably don't have all the gold that they claim they do. They're probably leasing out this gold, including Venezuelan gold. So imagine when Venezuela asks for $1 billion in gold back from, either $1 billion worth of their gold back from the London banks, and they're going to want the gold back in bars. They're not going to want promissory notes. They're not going to fall for this again. Maduro's going to figure, listen, we're going to get this shit back when we can in its physical form, not a promissory note, because they can screw us again, and they probably would. So anyway, Maduro's going to ask for this gold back as quick as possible as soon as this runs through the court system. What that does to London markets, I don't know. It should put them in a big panic to be able to provide Venezuela with this gold, which I'm sure they leased out to other people. I'm not even sure they would have it there. Anyway, this could play out to be something really big, and if this is true, it's going to be really good for us gold and silver holders, because what's going to happen is the London Bank will either have to default, or there'll be some big issues with it, or they'll have to go out there and someone will have to support them so they can go out and buy all this gold to replace for Venezuela. Anyway, I say keep an eye on this. I think this will have an impact on the price of gold, not too far in the future. Again, depending on how long these court cases last for. And that's just my opinion. Saw this article a little bit earlier here. Dip buyers send gold ETF holdings soaring to record highs. You know, I have a love-hate relationship with ETFs. The hate part is that I don't think they own the gold. I think they just own fractional parts of gold, and people think they're buying gold, and they're really not. They're just buying a piece of paper that's leveraged 100 to 1, which means that for everyone that thinks they own an ounce of ETF gold, they don't. Them and 100 other people do. So maybe they own 100th of an ounce of gold in reality. But that's my opinion. I don't think the holding companies really own all this gold. I think they're heavily leveraged. No less, these ETF gold and silver funds have a big influence on the price of physical gold and silver, because a large amount of the public doesn't buy physical gold and silver. They buy these ETFs. They don't know. They think they're buying an ounce of gold. They think they're completely safe. And, you know, up to date, they've been right. You know, they've not defaulted. These ETFs not defaulted. The ETFs have not had any big issues or anything like that. But at some point, I think they will. And there's no better gold and silver than the stuff that you can physically hold in your hands. Why would you have someone else hold your gold and silver for you? And that's what I don't understand about ETFs. And I think that the ETFs really have way more weight and power than they really deserve. I don't think they own that much gold. I think they own 100th of that gold, yet they control markets pretty heavily. So when ETFs get sold off heavily or bought heavily, it does really have a big impact on markets, and that I don't like. I think physical should have impact on markets, not a piece of paper. That's just my opinion. Anyway, source of Bloomberg here. The source is Bloomberg. Even though it's Zero Hedge runs a lot of articles from Bloomberg and all other sources there too as well. They're more like a hub. They don't do their own news for the most part, although they do write some of their own stuff. But as gold prices dipped, ETF inflows accelerated, sending, just what I said, sending the total gold ETF holdings to a record high, as Avian Bull pointed out. ETF buyers have more confidence, and this was an interesting statement, ETF buyers have more confidence than buyers in the futures market. Well, that is an interesting statement, because ETF buyers also have an outsized influence on the market, which means that as much as they can, when they start to selling, they can really kill a gold and silver market really quick, or cause it to go down substantially. Again, like I said, I think 100 to 1 to what the real stuff is. They can also do that in the opposite. They can also raise the price of gold substantially. And I think that's kind of where we're at right now, as ETF buyers are going to be causing the market to go up here when you see these big giant rises and these big swings. Let's move along to the next thing here. And this guy was very optimistic, Van Geyser. I've heard of him before. I'm not quite sure who he is, but he's always optimistic on the price of gold, and I thought this was really cool. He says, what also happens to okay, hold on. He says silver at $25 ounce is incredibly cheap. Now, I can't argue with that. Silver is incredibly cheap at $25 per ounce. However, in his view, it's going to $600 per ounce. Well, from his lips to the silver god's ears, I hope that's true, because, well, on the other hand, if silver goes to $600 an ounce, does that mean a loaf of bread is going to be $600? Well, all things are relative here. You got to think of that as well. Let's see what else he says here. Gold should be at least $10,000 per ounce right now. You know what? Inflation adjusted, as he says right here, I couldn't disagree with that. But he goes on to say, when gold is 100,000 to 100 million per ounce, oh Jesus, don't even think about that. That's just plain ridiculous. If it gets to that point, you don't want to be in a country that you have to have $100 million for an ounce of gold. That means that you're just in super hyperinflation period. And just because your gold's worth $100 million per ounce, again, a loaf of bread is going to be 50 million. So think about that, folks. That's not so positive, what he's saying there. But I think he's kind of a little overshooting it there, and there's got to be a reason for it. Gold is going to reach an ultimate peak. I agree with him, but that depends on the amount of money printed. Can't argue with that. But I think his forecasts are a little bit over the top. Let me see here. What else? Well, that's really it. I won't go too much into that. This is a Zero Hedge article that you can read. It's done by Greg Hunter, USWatchdog.com. I've seen a couple of his things. He's kind of funny, but he does bring up some good points and good interviews occasionally. And again, if you type this in on your Google, or as I like to use, DuckDuckGo, it'll pop up in your feed there, and you can click it and read it. Well, anyway, I told you I'd keep this report kind of quick, and I did. And I'm not going to give you any, as I said, really prediction what happens tomorrow, because I think a lot going to depend on where the world markets are this evening and what they do this evening. I think if they go back up to 1900, you'll see about the same. But if they stay down, you'll probably see closing or openings in New York lower for silver, gold, and platinum. And again, as I said, that's a good buying opportunity. Don't freak out. And it seems that Trump said no stimulus, which sends stocks and bonds going down, which sent dollar strength way up. And there you go. There's our reason for lower prices this evening and potentially lower prices tomorrow. Anyway, wanted to give you this update and let you know why the prices are down a little bit so you can make a better trade tomorrow. Chances are we'll see lower prices tomorrow because of a stronger dollar. But remember, it won't last. This is Brian Kuzma with Commercial Rare Coins and Precious Metals in Lauderdale by the Sea. Call me at any time at 954-493-8811 for live quotes on precious metals, advice, in our opinion, the advice that we give you, and I'd give that same advice to my mother, and I do. And also ask us what the best deals are and what best products are available. We're happy to tell you that. Hey, have a great evening. Look forward to you tomorrow. And actually, I'm going to go have my first dinner outside at a restaurant, sitting at a restaurant in the last 7-8 months. So that ought to be interesting. And another reason why I'm ending this report early. Again, thanks for watching. I appreciate it. Make sure you like and subscribe to my videos and hit the big bell up in the corner. I appreciate that as well. Have a good evening.